This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walk.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and if you notice, I have applied a short-term daily resistance line to the chart. Again, the short trade is still in play right now. If you are already short, I would use this as a trailing stop for the trade. Any close above the shorter-term resistance line, that would be a reason for exit. If you are flat the pair, as of right now, there would be no entry in my opinion. I'm just going to wait for the short trade to set up, which would be just a couple of pips or maybe at that shorter-term daily resistance line with a stop maybe 50 pips or so above that line. The next chart is the Aussie Kiwi, and if you recall during yesterday's report I was mentioning how we can kind of slide the support line and how that's not usually a good idea, and once you start doing that you should usually wait a little bit just to see how the market is reacting to both of those lines. So moving forward now, we can see we had a close above the line if we draw it this way, and this line still acting as resistance. However, if we slide it down a little bit and actually just connect all the lows, we can see that this line is still acting as support. So moving forward now, I have no confidence either way, only because there are two distinct ways to view the trade. This will happen from time to time, so in my opinion, just keep an eye on this maybe another day or so to see which line the market is really adhering to. The next chart is the Pound Swiss. Not much has changed here. If we zoom in a little bit, let me actually zoom out first. This is a longer term support line that I'm looking for prices to come down right near that 170 area, but moving a little shorter term, if we zoom in here, I could argue this is a bullish engulfing candlestick pattern. Could indicate a reversal. The only thing I've been wrong on a couple of spots where I tried to pick a reversal on this pair. With that being said, this is a borderline, a decent sell signal here. I like a trade, a short trade with a stop just above the most recent highs near that 78.85 area. So what we might do over the next 24 to 48 hours is wait for prices to come up maybe a little bit, maybe another 50 pips or 75 pips or so, which will give us a more favorable risk-to-reward ratio in the trade. The next chart is the Euro Swiss. Not much has changed here. Still just waiting for prices to come and test the longer term resistance line. We had a near test of that line. Maybe some traders did enter on that, as I did have this line up for a long time, for the past several weeks now. So maybe you are, if you did enter on the short side, depending on your individual risk parameters. Personally, I was waiting for prices just to get a little bit higher than they did at this candle right here. So if you are short, I would continue to stay short. Exit the same premise as the Euro Pound trade. You'd exit on a close above the longer term daily resistance line. If you have no trade right now, if you are flat, I would just wait for prices to come up near that 152 area, about 140 pips away from the current price action right now. And again, same concept here. We'd look to enter at the resistance line with a stop, maybe 50 to 75 pips above the resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.